Hey, good morning. This is Mayor Valensky with Driving Markets. So the OECD, the Organization of Economic Construction and Development, has downgraded the UK. The UK is part of the G7, the top 7 economies in the world. It's been downgraded from a 3.6% GDP for 2022 to 0.00%. In other words, the UK is going to have zero growth. Now that could put us, or could put the UK into a stagflation economy. What's stagflation? When you've got high inflation and lower growth, you've got stagflation, which is the worst of the worst possible economic climates. It means that companies are not growing, the economy is not growing, and yet inflation is rampant, and we could be on the verge of stagflation in the UK. In the US, the governor of the Atlantic Bank, the president of the Atlantic Bank, has stated that growth in the States will drop to about 0.9% from an expected 5.6%, and that's bordering on the verge of recession. And I believe that the US and Europe and the UK is going to go into recession, and the central banks are doing very little about it. In fact, there is a growing pressure sentiment on Rishi Sunak that he might have to produce another stimulus package worth hundreds of billions of pounds. What's that going to do to inflation? That's going to send it even higher. The central banks are so slow and so behind the curve that they've not managed to control the fiery furnace of inflation. That's going to have a big impact on individuals, on businesses, on companies, and on the economy. If you look at Hungary, Hungary's reported a 10% inflation rate, and Hungary is part of the EC. So the EC today, ECB, is making a interest rate decision, which could be the first increase in more than 2 years, and they're reluctant to do it. But the inflation is so out of control that they're going to have no choice but to raise rates in Europe. Where will that put the euro versus the pound, the euro versus the dollar, and the euro versus all the other majors? Well, under normal circumstances, what would happen is that the euro would shoot up. However, due to the fact that Europe's going into recession and could go into stagflation, it'll probably push the euro down. So I'd be a seller of the euro, not today or tomorrow, but definitely short term to medium term, because I expect the euro against the dollar and the euro against other currencies to either stagnate or go down, especially the euro dollar, to par 1-on-1. US dollar Japanese yen is at a 20-year high. The US dollar yen is at the 20-year high, 134. The US dollar is only going to get stronger over the next year, 2 years, for 2 reasons. 1, rate rises, and 2, it is a safe haven in times of crisis. And that's what's happening. There is a potential crisis. If we're not already in it, we're on the verge of going into it. Intel has just now limited and stopped hiring of all new staff. They put a freeze on all new employees at Intel, and Intel employs hundreds of thousands of people globally, and the semiconductor has put a stop on it. They're adding to the list of other freezes: Amazon, Facebook, Netflix, Google, Facebook I mentioned, Gemini, Exchange. They've all put either freeze or they're going to lay off staff. That is a bad sign going forward. And what impacts having on the markets? It's having extreme volatility. In the morning, the markets are up. In the afternoon, they're down. And it's impossible to trade because, as one of my colleagues said, liquidity is so spontaneous. In the morning, there's no liquidity. In the afternoon, there's lots of liquidity. Or in the morning, there's lots of liquidity. In the afternoon, there's no liquidity. It's impossible to trade. Also, look at options. Options have become so popular, the sought after asset, that the volumes are the highest than ever been in option history. The CBOE, which is the Chicago Board of Exchange, but trades options, has said options have gone through the roof as retail investors, retail traders start trading options more and more on financial markets. Crypto, Bitcoin, I keep calling it down, but it's not going down. It's still stuck at 30,000. So I got it right when it was 48 down to 32, but I haven't got it right from 30 to 20 so far, but I do believe it's going to go down. price of petrol on the forecourt in the UK is going to hit £2 within the next week or so. The price of gas or petrol in the States is going to go to $7 to $8. Inflation is only going to go up. Russia has also done a partial technical default on its US dollar denominated bonds by paying either the interest or the redemption in rubles, because the US has banned all transactions in US dollars from Russia, so they paid for it in rubles. It's a technical breach, but what they're trying to do is they're trying to make Russia bankrupt, and Russia is fighting hard not to go bankrupt, but it could go into default on its sovereign debt. So you've got all these factors. You've got interest rates, inflation, ECB rates, you've got foreign exchange rates, you've got foreign exchange markets are all over the place. Then you've got crypto traders don't know whether to buy or whether to sell. I'm saying sell. Just sell everything. Any rise in the market, sell it. You need to sell this market. There's a lot of confusion, a lot of unknown what to do, a lot of instability, and rates are going to go up. Also mortgage rates. All those people, mortgage owners, that their fixed rate comes to an end in 2022 are going to get a hell of a shock when their mortgage interest payments are going to either triple or quadruple depending on which lender they're with. So we're going to go through very, very uncertain times. You need to tighten your belt, and if you're a trader, you need to continuously go short of the market. We haven't seen anything yet. It's going to go down a lot more than we're at the moment. I'm calling a 40 to 50% drop in stock markets from these levels, not from January levels. This is Mayor Walensky with Driving Markets. Catch me on Instagram, Twitter, WhatsApp, LinkedIn, YouTube. Follow me and you'll get updates from the markets on a regular basis. Have a good day.